Hi everyone, I'm Gakhar, Life Insurance and Investments Advisor. Today I have an opportunity to bring Thomas Juha from RBC for my viewers. Thomas has been in the insurance industry from 2016 and 2017 he was promoted as sales consultant. Thomas has a lot of knowledge about living benefits, very especially about disability insurance, which is a very key factor for anybody's portfolio. So I would like you to straight hear from Thomas Duha and how he can tell us about various products from RBC. Hi, Thomas. How are you?
Hi, Sam. I'm great. How are you? Thanks for having me today.
Yeah, thank you very much for coming. I'm very happy to have you on for my viewers, and I'm sure talking to you again would be a good value where my clients or my viewers are able to hear right from you. So thank you for coming.
Absolutely. Absolutely.
Okay, so Thomas, I would like you to tell my clients how RBC is positioned in this insurance industry. RBC is in banking as well. A lot of times clients come to me and they say, RBC is a bank. Is it an insurance company? So a lot of times I would like you to tell me what are the product specialities for RBC in terms of insurance? Yes.
Yeah, so a little bit about RBC Insurance. Like I work specifically for RBC Life Insurance Company, which is a life insurance company. So we happen to be owned by a major financial institution, a bank, amongst other things. It's a major global financial institution. So that's really the strength in our size, and that's where we do get a lot of our commitments on policies. But RBC Insurance is an insurance company at heart. So where we came from, it's very similar to a lot of our other carriers. RBC in the early 2000s was acquiring up other life insurance companies. So some of the major ones we purchased were Unum Provident, and Paul Revere. And those are big disability insurance carriers. So we have about, I believe, 50 to 60% of the in-force disability insurance market share. And on new business, it's quite high as well. So that's really our background. That's where we come from. We're also a leader in term life insurance. So we're always, in the last 10 years, been in the top 3 for term life insurance sales. So for premiums for clients, say 60 and under. And then we're also looking at growing our business in the permanent life insurance space. So we actually have a new product coming out in January, or a new whole life participating product. So we're very excited about that. But at the core, RBC Insurance is a life insurance company. We, very similar to a lot of our competitors, the Manulife, the Sun Life, the Canada Life, in terms of our product offerings. And so, yes, we have to be owned by a major bank, and we are the largest bank-owned insurance operation in Canada. So that's really where we get our strength and really our advice. Like a lot of our, we're not just a new operation. Like the companies that we purchased, that's where a lot of our talent and underwriting support and claim support comes from.
Oh, that's very nice. And very especially RBC has something called pick a term, where if people are buying it for the purpose of mortgage, they have 20-year mortgage, a 25-year mortgage, a 27-year mortgage, they can pick a term and they can get it. That's something I really like about RBC.
Yeah, it's actually your term is our product. So if a client can pick a term or pick, that's right. A competitor's product called Pick a Term, but essentially we can pick a term from anywhere from 10 to 40 within a client, and up to a certain age restrictions. But yeah, that's the value. It's having something specific. The other thing, just specifically about our term insurance, where a lot of the carriers are moving to, especially around the world, is going into when the term ends. So say I have a term 10, it doesn't just go up for another 10 years. It actually goes up in a YRT function. So if I bought a term 10 or a term 20 and I need 23 or 24 years of term, it doesn't necessarily just jump up to a crazy price. It goes up slowly, so I can keep that in force for a couple extra years and not have to cancel it or pay some exorbitant price. So that's really where the term landscape is. Yeah.
Yeah, that's, I think, pretty unique then in the industry as well, right?
Yeah, it's something that I think, helps keep policies in force, but also just gives the client flexibility. Because the thing is, we talk to this 30-year-old or 35-year-old client, and they buy a term 20. Well, there's no kind of magic secret potion that maybe 20 years from now, they're not going to need term insurance anymore, or at that point, they might not be healthy. So it gives them some extra leeway on that. The other thing that we also have is an exchange provision. So a lot of our term life insurance policies are sold actually as term 10 policies. In the first 5 years, there's a provision there that without medical underwriting, you can exchange that to either a term 15, a term 20, or a term 30. So for a younger client, say a 35-year-old, a 40-year-old, they might not know whether they need a term 20, a term 15, or a term 30. And that gives them an extra 5 years to make that decision. And the other thing it does, it also frees up money in the short term. that can be used for other things. Because oftentimes we see clients that are getting into their first insurance policies and they never paid for insurance before. So it's extra money coming into their budget every month. And so a great thing to always look for, and we can talk about this in a couple of minutes with our next question, is that oftentimes people think long-term on their insurance solutions, but there's provisions in these policies where we can actually, grow with those policies without any medical underwriting in the future. So the exchange provisions, the conversion provisions on different life, CI, and DI products.
That's very good. That's very good. And, when it comes to RBC, for me, in my mind, the thing which comes is disability. Disability, RBC has different functional series, fundamental series. So where exactly is the speciality of RBC in terms of disability products?
Yeah, so I wouldn't say we have a specialty in one type of market. Like we do really well with doctors, and we have great programs for students, doctors, and different students, and we have great programs on that. But we really do have a disability insurance product that competes with the whole market. So whether we're talking about our non-cancelable products, which are products that have locked-in rates till 65 with very limited exclusions, we have a large part of that market share. And there's only a couple carriers in Canada that actually have those types of products, and we're one of them. So that Unum, that Provident, Paul Revere that I was talking about earlier, that's where those products come from. But we also do have guaranteed renewable products, and those are the accident-only products, the products where there's more exclusions, more limitations, financial underwriting at claim time. So we just really do, when you come to RBC, which you can't always say about all of our competitors, like they have great products, but we're able to really offer something at every point of the market and compete with every product. So what it comes down to for disability insurance is, yes, we have the good products, but we also have the advice. So we do have a lot of wholesalers or advice people that brokers use for disability insurance. So when an advisor comes to RBC, they have the confidence that RBC is able to recommend the best possible product. And that's the key with disability insurance, is making sure that you're in the right product. It's a lot different than term life insurance where, price is kind of king on it. It's really about did I get the right provisions on the policy, and was it set up in the right way?
I know, that's very right, the way you said. And of course, you meet so many advisors and their clients on a regular basis. And I'm sure you see that there's a lot of gap in the insurance planning that most people have it. So what would you like to say about that?
Yeah, as you mentioned, when we first turned on a webcam, I'm not the oldest person in the industry that you said. And so what I would say is people often don't take a very holistic approach to their insurance planning. And so what I mean by that is when people are young, they have to look at all their risks. They have to look at all the risks, make sure they're insurable on all their risks. So when I say insurable, it's able to get the insurance, get through underwriting at the youngest possible age. Because the younger you are, the better chance you're going to be able to get that product. And so what I would say is we often see advisors that are selling these long-term life insurance policies without any critical illness or disability insurance. I would say what it comes down to is, when I'm looking at an insurance recommendation for someone, my first thing I'm looking at is, are the products in place that are going to protect these risks? So if I'm 35 years old and I get cancer and I just have life insurance, I might be able to work for 2 years. Well, I would have liked to have some disability insurance to protect my income and critical illness insurance to give me some extra money to pay for my treatments or give me options. So I'd say that's really the major risk is not looking holistically and putting all our eggs in one basket with our budget. And what I talked to earlier about the term insurance, one of the, I think the major things that people do is they often lock in these long terms that maybe you're there for 20 years, 30 years, 25 years, but they can always take a shorter term at the beginning and grow into that term in the future with the provisions at that certain company. Yeah. So that's something that I see a lot of. And then also just people relying so much on their group benefits at work.
Yes. My next question.
Everyone's group benefits is different. Yeah. So go for it, Tim.
Yeah, sorry about that. I really wanted to ask you this question very specially because as an advisor, I come across a lot of clients. They say that, disability, I have it from work. My work covers it. Yeah. So a lot of people have it in their mind that their work is covering their disability. And what do you say about that? When they have it from work and when they have it separately, how does it make a difference?
Well, there's a couple of things we're looking at. There's really three things that we look at when we look at someone's group benefits, and specifically group disability. Because when I bring up disability, it's one of the major risks that people have. Everyone buys life insurance, but so many people are, often, not covered for disability or not covered for what they think they are. And during someone's working years, it's so much more prevalent that they're going to suffer a disability than actually die. But when we look at group benefits, and what's key to remember is I might have group benefits, but my group benefits are very different than my friend Steve's group benefits and very different than Sim's group benefits, right? So it's so important that we allow our advisors and encourage our advisors and do the due diligence ourselves to actually look in the group benefit plan to see what people are covered for. Because what we find is that people have definitions of disability in their plan that really aren't good enough for them if they go to make a claim. It doesn't cover part-time work. If they return to work part-time because of a disability, they're often getting nothing. Or we have this executive who's making 200 grand or 500 grand, and now because of the disability can only make 50 grand and gets nothing. We see situations like that. The other thing is different plans have different amounts that they're actually covered for. And sometimes they're taxed at claim time, sometimes they're tax-free, and that makes a big difference. So it really depends. Like you might be at a big company or a small company. There might be, say, a maximum of 5,000 in the plan. There might be a maximum of 1,500 in the plan, right? It's all different, and it's important to run the case of what's actually happening. The other thing we see is with high income earners, we call this reverse discrimination. So basically what that means is the most important people at the company, and from a compensation standpoint, are the ones that are being paid the most by the company. But because of maximums on plans, those are the people as a percentage of their income are covered the least under disability insurance. The reason for this is because one, those maximums that we have, but a lot of those definition of earnings on the group LTD plans at groups are just based off salaries. And a lot of high income earners are based on salary, bonus, and all that. The third thing that we really look at, and I would say one of the most important recent developments is just the portability of a disability insurance plan, or any insurance for that matter, whether it's your life or critical illness or health and dental products, is the portability. Because we see people working at a company and then they go to work at another company, and that company might have a different group benefit plan, or they become a contractor. So something that I see every day is someone works at one of the major banks and they go back to work at another major bank, but they're on contract. They become incorporated. They don't have that coverage anymore. So the hardest thing is when you want to take that jump and you want to become self-employed, but you can't because you can't get those benefits and you're not healthy anymore. So it's so important that while you're at the company, you get insurable. The great thing about a disability insurance product is you can put a guaranteed insurability rider on it, or you can then add coverage in the future if your health changes, or every year you can add coverage. So it's just so important to make sure that you're asking, as a client, asking that other question of what am I missing on my plan? Can you look through it? And most advisors will, for free, go through your client's group benefit or go through a group benefit booklet to see what you're actually covered for and put some solutions together. So I'd say really the number one thing though is portability. If you're at your company now and you get let go or you decide to leave, that disability insurance policy typically does not go with you.
Yes. And I really like one more, built-in feature in the policies, that future insurability rider, that in case sometimes people have the coverage from work, but they don't have it enough, they can always top up by buying separately. And then at the same time, they can buy a rider or future insurability option. And then as in case they're self-employed or they want to add more, they don't have to provide the proof of insurability and they can get it added. So I think that's also a very good part of it. Absolutely. Yeah.
It just gives people options. Like that's the key thing. It's being able to have options and being able to add coverage on your own terms. That's really what I would say is key. And for me, I bought my first disability insurance policy pretty young at 22 when I first started the industry. And now I've added onto that plan, I think 3 times without proving my health again. So it really is a great way to just, keep adding and not having to think about going through underwriting again.
I did the same thing. As I started growing, automatically, every year I was adding more and more. And I think whatever you've answered has a lot of value for my viewers. And I'm sure everybody is going to think about how they can make few more, very, very useful additions to their portfolio, because disability is definitely a very, very important part, because that is called your loss of income, because you are your biggest asset. And if you're not able to work, everything else cannot be taken care of that well.